Yo, welcome to another episode of Simply Bitcoin IRL. Today we have a very special guest. We have Ben Gagnon. Ben Gagnon was just named the CEO of Bitfarms. Bitfarms is one of the world's largest publicly traded Bitcoin mining companies. I also consider him a really good friend as well. So really excited for this conversation. But before we jump into it, I do want to give a shout out to Simply Bitcoin's lead sponsor, and of course, I'm talking about Bitcoin Well. Bitcoin Well is a publicly traded company coming out of Canada that recently expanded to all 50 US states. The best place to build your automatic self-custody Bitcoin stack. That's right. When you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address. Support self-custody by default Bitcoin on-ramps like Bitcoin Well. To get started, go to bitcoinwell.com/simplybtc today. All right, everybody, no more delay. Do want to bring up Ben on stage. Ben, man, good to see you again. Welcome back on the show. I don't think we've ever done a one-on-one interview, bro. So I'm kind of looking forward to this. How you doing?
Kind of looking forward to this, man. I've been looking forward to it all week, so I'm glad you're kind of looking forward to it.
Oh man, you one up me on the looking forward to it, Nish. Anyways, dude, a lot has changed, to say the least, in your life in the last
Yeah.
couple of weeks. I gotta say, Bitcoin Twitter anticipated this. If you've just been paying attention, a lot of people have been rooting for this as well. So you just were named the CEO of Bitfarms. How do you feel?
It feels amazing. I mean, this is something I've been working towards for several years now. It's been my personal ambition for a couple of years, and I never thought necessarily we'd be here. So it's amazing to be here in this spot, to be leading this team at this incredibly exciting time. We're coming in here at the cusp of, or right in the middle of doing the biggest growth we've ever seen. And, we've got a lot of opportunity and a lot of excitement within the company, internally, externally about, the new change in leadership here. Sky's the limit for us. Very exciting.
Absolutely, man, and I'm excited for you guys as well. And and maybe I'm a little bit biased because I consider you a friend. I think you are the right man for the job. And Ben, you've been in the industry for for quite a while now, right? So I would say that you're a well-earned veteran, man. Like you've earned your stripes. So could you talk a little bit about, like, in the early days, how you got into the industry in the first place and how it led up to you becoming the CEO of one of the world's largest publicly traded Bitcoin mining companies?
Yeah. I mean, I've told the story a few times, but I missed out on a great chance to buy Bitcoin in college. I found out about Bitcoin when it was sub $1, and people were using it to trade files and software on this website. A lot of my friends in college like to use. And there was actually a friend of mine who was, or a classmate of mine, who was mining Bitcoin on his fraternity PC, and he wanted to sell us some Bitcoin for beer money. And we were looking at buying $100 worth of Bitcoin at about 70 cents. This is back in 2010. Um, and we thought we were getting screwed because we thought, hey, this is like a cool thing. It's really neat, but like, what are we going to do with $100 worth of Bitcoin? Obviously we're getting screwed here, and this guy's going to take our money. He's going to go buy beer, and we should go buy beer with it. So, my friend and I went out and bought beer with $100 instead. And the next year, Bitcoin went from about 70 cents to like 1,100 bucks. And we said, what the hell did we do? We could have been, crazy rich. We could have bought all the beer we wanted. And it really starts making you question your life choices. So, a little while after I actually tried buying my first Bitcoin miners off Butterfly Labs in, I think it was 2013. I sent them 5,000. They never sent me my miners. The year after that, I went and bought Bitcoins on a Bitcoin ATM, just like Bitcoin Well, and had my first Bitcoins in 2015. Ethereum came out. And when I saw Ethereum coming out, I realized this was my chance to, get in on the ground floor of something that was, looked to be really, really big and like the next big thing. I started mining Ethereum. We did it in my house in Hong Kong. It worked out well building out our first rig. We put every dollar we had into it, my girlfriend and I at the time, and flew off to Taiwan. We built an Ethereum mine in her family home. We had some problems with that because we kept getting raided by the police for using electricity. They thought we were growing marijuana. We were just mining Ethereum, and they couldn't understand that we were consuming so much power in this small residential house. And so after several months of weekly visits from the police and scaling up the business, we actually moved everything off into mainland China. And I built up a Bitcoin mine and an Ether mine in mainland China. That was really good in 2015 and 2016 and the first part of 2017. But towards the end of 2017, it was getting much more difficult to operate in China. There was a lot more attention towards Bitcoin miners, and so I had to pivot and move out of the space. I sold all of our equipment kind of in October, November 2017, which turned out to be a really, really good time to do that. I pivoted into a manufacturing business for a few years. And then I joined Bitfarms in 2019. So I've been here 5 years. It's been quite the path for me. I've been following Bitcoin at this point for 14 years, and I've been mining actively for a full nine, almost on my 10th year now.
Yeah, man, that's crazy. And then that's also like an inspiring story, man. You started from literally the ground level, you paid your dues. You call it paying the price of tuition. There's been so many, I think as a coiner, you definitely have to have at least one or two stories of you just doing something like bro, I could have just bought 100 Bitcoin. It was so much easier, and I didn't because I did this instead. And you look back and you're like, wow, that was millions of dollars. What was I doing? But I feel like it's almost like a rite of passage in a way.
For sure.
So I feel like it is a tuition cost that you have to pay. I don't think I've ever met an OG who didn't have regrets in terms of not selling Bitcoin or not stocking hard enough. Just
Yeah.
because back then it was a lot more uncertain. No one knew what this thing was going to be. It's so easy to say this in hindsight, but back then it was a lot more uncertain. Like Mount Gox, the exchanges were sketchy. The mining industry was just getting started. Like people were still kind of transitioning from GPUs to the ASICs. Like it was, it's a lot easier said than done, type of thing, man. So it's an inspiring story. You definitely earned it. You've worked for it. Now, how has it been in the hot seat these last 2 weeks? I feel like you're already in the executive level, but what has changed since you've taken up the role as CEO?
Well, my first 2 weeks, really, I've spent almost the entirety of it on the phone talking with people. I'm talking with investors. I'm talking with analysts. I'm talking with every manager in the company, any person who's kind of like a key decision maker. I'm speaking with. Um, and so what I'm doing is I've got a very clear vision for what I think we as a company should be doing and where we should be growing, and how we should be moving forward and position ourselves not only for this year, but through this entire halving epoch cycle, all the way out to till 2028 and the next halving. But what I need to do is I need to validate those assumptions. I need to speak with investors to make sure that everybody's aligned here in terms of the vision that we're going to, and how we're going to create value and what's important here. And also speaking with all the employees and getting from their perspectives, what they think we're doing right in the company and how they think that we can be improving. And so for the first 2 weeks, it's been having a lot of these calls. And I think the biggest thing to change is really just the excitement and the energy that's in the air right now. Over the last couple of months, there's been some level of uncertainty, and there's been um, some people worried about what's going to happen. And now that I'm in the seat, and one, I'm a trusted face, I'm a known entity, but also I have gone all the way from building and assembling racks and taking racks on and off miners and programming the software and working on the debugging of things. And I've worked on every single aspect of this industry, and climbed my way up. So I think people feel a lot of comfort, and I think people are really, really excited about what it means to have an operating CEO in the seat here. Everybody's very, very optimistic about the future, and so am I. Like, we've never had, I can honestly say this, like, I don't think we've ever had a better future ahead of us. We've got so many opportunities that we can tap into, And now really it's about hitting the gas pedal and going hard.
Absolutely. And when you said something there, you said very interesting, which I completely agree with, which is this idea of a proof of work CEO, a CEO that, you grinded it out, right? You climbed yourself, you crawled through the trenches, figuratively speaking, and you got yourself to that position. And I completely agree. I see the happy. I think I was like sending you the tweets from there's been this huge community that just really came out of nowhere in the last 2 years of a big community of people that are very passionate about publicly traded Bitcoin miners. And I saw a poll was like who should be the CEO of Bitfarms, and it was, of course, it was Ben Gagnon, right? And you won that. I sent that to you, and I'm like, I had suspicions in my head, and yeah, I think the community absolutely received it very positively. Now there has been some consolidation in the industry, some ups and downs. Not to mention the halving that just happened. Obviously, you kind of lose half the amount of Bitcoin you're mining, even though the price of Bitcoin has stayed relatively the same. So how are you guys navigating that?
Yeah, I mean, I think the big thing for a miner is you got to be thinking ahead of the curves. There's a big, I think there's a big push in our industry to be really, really reactionary. But really, in order to win at this game, you need to be thinking beyond. Right now, you need to be thinking not even this year. You need to be thinking 18, 24, 36, 48 months out, because you need to be aligning your strategies. You need to be getting yourselves in the position to take advantage of the cycles that are going to play out. So when you look at kind of how do you navigate something like a halving event? Well, you don't navigate it, in December of 2023 or January 2024. You start working on that in 2020, and you started thinking ahead about where do we need to be with our energy prices long term, and how competitive is this thing going to be when the Bitcoin reward gets cut in half, and are we still going to be efficient, and are we still going to be able to operate competitively, and when are we going to need to be making those upgrades in our fleet to best take advantage of the cyclicality that keeps playing out every single halving epoch. So for us, like, said this for a while, but like we really started working on this back in 2020, getting ready for the halving with a strategic view of where we need to be with our geographically diversified portfolio of energy assets, how those energy assets need to be competitively priced in terms of this environment, and also thinking about how we're getting the most out of our machines and getting the most out of these upgrades. So like that's what we did. Like some of the machines that we bought, actually the best machines that we bought over the last halving epoch cycle were the ones we bought right at the beginning. And the reason for that is because you bought those, or we bought those in advance of the rising Bitcoin prices, and because of that, we were able to capture all that upside from rising Bitcoin, and we were able to pay off the equipment really quickly and still generate huge amounts of positive free cash flow. So some of those miners that we bought back in 2020, the M30s and the M31S, they paid themselves off between 5 and 8 times over, and they were still generating positive free cash flow when we pulled them off rack and we were upgrading them with T21s earlier this year, right? So nothing in our space happens overnight. If you're looking at, hey, the halving's coming in the next 3 months, what are we going to do? Unfortunately, it might be too late for you. Maybe you can pivot and maybe you can do some changes. But really, if you want to play this game and you want to out compete and outperform, you need to be thinking ahead, and you need to be playing in some ways. You need to be anticipating what is going to be coming in every single cycle and getting ready for it.
Absolutely. Ben, this is a highly competitive space, right? You have multiple, publicly traded Bitcoin miners. How does Bitfarms, and especially now that you are in the CEO seat, how does the company plan to differentiate itself from the other Bitcoin mining companies?
I think that's a great question, because especially when you look at the publicly traded Bitcoin mining universe, I think the number one question everybody is asking is why would you buy Bitfarms over any other Bitcoin mining stock, or why would you buy, Marathon over Clean Spark, or Clean Spark over Marathon, or whatever it is that you're looking at. We're highly commoditized, as you said. You've got to choose the counterparty and the strategy and the portfolio of assets that you think is going to do best. The way that we look at it, here at Bitfarms is we understand that investors are looking to outperform Bitcoin on when it rises, right? Nobody is buying into a Bitcoin miner because they think the price of Bitcoin is going to go down or it's going to stay flat. Like that kind of, I think, investment thesis doesn't exist. So people are looking at, we want exposure to rising Bitcoin prices. Well, why don't they just buy a Bitcoin ETF? Well, they don't buy a Bitcoin ETF because the Bitcoin ETF can only track spot price. So, just going through these kind of simple logical questions, you end up at a position where, okay, the reason why you buy a publicly traded Bitcoin miner is because you want to outperform Bitcoin. And then now you need to choose which is the right counterparty to do that. I think when you look around at the space, valuations are all over the place. There is no consistent way to value the different Bitcoin mining companies that are out there that you can say is like, universally applied across all of the different miners. And so I think what you need to look for are areas where you've got relative value, and areas where, the investor can have the higher probability of outperforming Bitcoin. For right now, at least, we are, I think, incredibly undervalued. I don't think the market has really recognized the strength of our growth plan and the significance of our growth plan. I mean, we are improving our energy efficiency 40% this year, while tripling our hash rate, and almost doubling our energy capacity. Like, these are huge numbers. It's the biggest numbers that we have ever put out. And in terms of a relative growth, it's not going to put us as the largest Bitcoin miner at the end of it. But in terms of where we started the year and even where we are now compared to, what's coming later in this year, we're delivering some very strong relative improvements that I don't think the market has priced in. Beyond that, what we need to think about is how do we make ourselves better Bitcoin miners by not being just Bitcoin miners? Because this space is too commoditized to just say, hey, I'm going to buy all the same machines as everyone else. I'm going to pay all the same, cost of capital as everybody else. I'm going to pay the same electricity price as everybody else, and I'm going to have an edge. I think those days are completely over. And what you need now is you need to figure out, how do you make the most out of your operations and how do you get an edge? And really, the reality is, if you think about it like a normal distribution curve, the best place to mine Bitcoin is not in the middle of that curve. It's on the tail ends of that normal distribution curve. It's on these outlier scenarios where Bitcoin mining can be used as a tool not only to secure the Bitcoin network and process transactions, but to monetize some sort of inefficiency in a system. Whether that be an imbalance between the energy supply and the energy demand, whether that be, energy price volatility that you're tapping into, whether that be some sort of synergy in terms of recycling the heat or monetizing some sort of a waste product. I think you need to be pushed further and further towards these outliers. And so what we're looking to do, over the next couple of years, is we're looking at ways that we can diversify, and expand and grow our business beyond just Bitcoin miners in a way that, we can tap into these other revenue streams that make us more competitive and better at being Bitcoin miners.
Absolutely, and that's something that I've continued to hear, and the strategy that I've heard from some of your competitors is just venturing into kind of like the AI space as well, and perhaps providing value there. I don't know if that's something that Bitfarms is considering, or something that you can give us insight into, about what are those potential alternative revenue sources. If you can hit towards it. If you're not, we can tackle another question.
I think the areas that are most interesting are energy generation, energy trading, heat recycling and repurposing, and then the most different one out of that bucket is going to be the HPC AI. Each one of those areas, or each one of those businesses, can play a very interesting part in managing a portfolio of energy assets. Obviously, if you've got the energy generation, you have the ability to supply your own power and control your own costs, and you can have that reliability and that cost effectiveness of that. If you've got the energy trading, you can trade the volatility and you can control your energy pricing to the point where you should never consume a kilowatt hour that is unprofitable. If you're talking about the heat recycling, you can monetize your waste product out of your miners, and you can put it to good use and sell it, to another business or to a district or some sort of system that needs that heat. When we've got a large amount of our portfolio in Quebec, and the province, while it's almost entirely powered by hydroelectric, it still does consume a lot of natural gas for heat. And there's all these programs around converting over the heat that's generated with nat gas into electric heat. And Bitcoin mining, is going to be a perfect avenue for that, where hopefully we can recycle a waste product, improve our economics, and make our actual cost of production and operation a lot more cost effective. And then the last one is that HPC AI, and these are completely different facilities than Bitcoin mines and Bitcoin data centers. But what they do have in common is that they both have an insatiable demand for power right now. It has a very, very different kind of outlook, right? With Bitcoin mining, we don't have any sort of stability in the revenue, but we have this tremendous ability to generate an incredibly fast return on invested capital, and we get exposure to rising Bitcoin economics. With HPC AI, you don't have any of that. What you have is you've got a very, very high revenue stream and a high margin revenue stream, but you don't have an incredibly rapid return on invested capital. There's no way that a well-timed investment into Bitcoin mining is actually going to pay off in a slower way than an investment in HPC AI. And then you also don't have this exposure to upside in Bitcoin prices. And so the way that you could incorporate HPC and AI into a Bitcoin mining business, I think is really, really specific. And I think it's targeting those energy assets, which, honestly might have been like legacy energy assets for a lot of people. These are the energy sites which maybe are higher reliability and higher cost, and are no longer as cost effective in mining Bitcoin, which would be really, really good for conversion over to a higher revenue and a higher margin source. And in some ways that you can look at it as just providing a base load or a base layer of cash flows to sustain normal business operations so that you can invest in that upside, exposure while minimizing the downside. And I think that plays a really interesting point when you're trying to create a company that's giving investors that asymmetric exposure to Bitcoin. You need to have some risk mitigation to the downside, and that could be accomplished, I think, by having a portfolio that includes some amount of HPC and AI revenue.
Absolutely, and it's fascinating. And then one of the things also, Ben, that really stuck with me, I never forgot this. And we were I forget, we were in, I believe, the Dominican Republic, and you looked at and you told me, you're like, Nico, Bitcoin mining is like a leverage long. Right. So yeah, to the upside, it's like everyone wants to be a part of that, but it's how do you convince investors to stick around for the bear market, right? Which, in my opinion, that's where the biggest opportunity presents itself. But like you said, alternative revenue sources could potentially provide that. It's very, very interesting. I'm very excited to see how that plays out. Now, Ben, my next question to you is, what are the biggest challenges Bitfarms currently faces in the competitive landscape? And now that you're CEO, what is your plans to tackle them?
Biggest challenge we face in this competitive landscape? That's a good question. I think we're very, very well positioned when it comes to our team and our operations, our portfolio of assets. I think we're very, very well positioned when it comes to our miner purchases and how we've timed them and how we strategize them. I think maybe the areas where we've really lacked performance or haven't been as competitive is really just in getting the market recognition for everything that we've accomplished. Part of that is the fact that the space is a lot more crowded now. When Bitfarms started, there was four companies that were, I think it was three or four companies were publicly traded, because it would have been Bitfarms, Riot, Hive, and Hut 8. So yeah, there would have been about four companies. Now I think there's 21 or 22 publicly traded Bitcoin mining companies. There's 12 or 13 different ETFs. There's MicroStrategy. There's all these different ways now for investors to get exposure to Bitcoin in these public markets. What we need to do now is really, we need to, as I was saying earlier, we need to go beyond just being a Bitcoin miner, and we need to identify and develop those unique competitive differentiators. And for the last 5 years, we've really been focused purely on Bitcoin, specifically in growth. And I'm by no means saying we're going to pivot away from Bitcoin mining. We've always been Bitcoin miners. We always will be Bitcoin miners. What we need to do, though, is now I think we need to look beyond just plugging in machines on racks, and we need to understand and develop all those different competitive, advantages, like I'm talking about with energy trading and energy generation and HPC AI and heat recycling, so we can be better, and we can attract those really, really competitive margins.
And do you believe that, and obviously it's incredibly obvious to me as a Bitcoiner, I think energy and Bitcoin mining go hand in hand, but could you elaborate a little bit more on that, Ben, for people that perhaps are not initiated on the matter? Like, how does a Bitcoin mining company get involved into, energy generation? Like, for anyone who just not familiar with the subject at all.
I mean, energy is everything, Nico, right? Like, energy is everything. Like, this is how humanity has advanced. It's how societies have competed. It's why countries have competitive advantages over other countries, is their access to energy resources and their ability to extract energy resources. I mean, you see it all over the world. Even tiny countries, like the UAE or Qatar or Bahrain, these countries have massive energy resources, and they're able to do, tremendous things as a result of that energy. Then you might look at, another country, I don't know, trying to think of a very large country that's lacking energy resources. It's a hard one to think about. I mean, every country has some amount of energy resources. I mean, maybe you can think of Australia as a decent example, because it's a very, very large country. And while it does have energy resources, it doesn't have necessarily a lot of energy resources developed. And a lot of their energy resources are things like coal, which they want to phase out, and they don't want anymore. So energy is everything. It's how we've evolved from cavemen, cooking meat, to building war machines and sailing off to fight in Europe in World War II and all these different things. Bitcoin mining is just the latest evolution of that, and maybe AI is the next part of this. But every time there's a major revolution, it's often driven by the ability to harness that energy to a new productive means. And so energy is always the primary asset. It's something that we've known at Bitfarms for a long time. It's not our Bitcoin miners and the mining machines that are the assets. It's the energy that's powering them, and it's the right to that energy that's powering them. That's the primary asset. So what you need to think about as a miner is, how do you manage this portfolio of energy assets to get the maximum utility and the maximum value out of that portfolio of assets? And there's going to be changes in technologies. There's going to be evolution in market conditions, and there's going to be the creation of new markets, like what we're seeing with HPC and AI. And I think when you look at how a lot of companies are approaching the HPC and AI space, you kind of have two buckets. You have the business model, which is very similar to how Bitcoin miners are operating right now, which is let's buy all the equipment, let's build it, and let's operate it. And then you've got the companies who are saying, let's just build out the infrastructure, and we'll let somebody else monetize the energy. We're going to just sell off the energy. and this can play out in two ways. You can look at it as like the hosting model versus the vertically owned computing model. But two, you can also look at it from like the sources of energy, right? So, if we want to host for a Bitcoin miner or host for an HPC client, you need that access to energy. How do you do so in a cost effective way, and how do you make sure that your margins are able to sustain both your operations and the company and are be attractive for investors? Part of that, you need to make sure that you've got fewer people making a margin. And so by putting that vertically integrated into your chain with energy generation, you can bring a lot of that control in house. And I think especially when it comes to what we see, or what I see, is like a world that needs exponentially more energy resources, and a society that is almost fundamentally opposed to really putting the investment in that's necessary to build out these energy resources. You end up with a big mismatch between supply and demand. And I think whoever has access to that energy is going to be the ones who really benefit. Maybe the best use for it is not Bitcoin mining. Maybe it is HPC AI. Maybe it's something altogether different. But whoever has access to that energy is going to be really key. You're obviously going to have to build up those resources internally, and for most Bitcoin miners, you can either do that at a really small scale, or you partner with a company, or you acquire a company that has those resources and you bring them in house. But you know theoretically, when you're thinking about the logic behind things and the strategy behind things, the economics and the importance of having that power are so fundamentally clear. You're going to figure out how you can bring those competencies in house and into your business.
Absolutely. Ben, you said something earlier, which is really interesting. I kind of want to double back on that point, which is the idea that your share value is underpriced. And I agree. And the reason that I agree with that is because I'm biased, and I believe it's because Ben is now the CEO. But other than that, what if you were to give a pitch to investors and stockholders and shareholders, what would be the case? Like, why is Bitfarms currently undervalued compared to everybody else?
I mean, obviously, I think the big real change here is the growth that we're having this year, and the fact that we don't really see that being impacted in our shares. When you look at how people are growing this year, people are adding exahash for sure, but a lot of people are not growing, multiples of what they were at the beginning of the year. And a lot of people are not improving their energy efficiency in the way that we are. A lot of people made that upgrade to XPs the year before. They already had a big leg up on the energy efficiency side of things. We were really patient and we were really disciplined, because we're trying to strategically time our entrance into this market, and we're trying to make sure that we're buying the most cost-effective hardware that we expect to be able to run for the longest period of time. Bitfarms takes things in a very strategic way. And sometimes, I think the market hasn't really understood the strategic aspects of how we're growing, why we're growing, and when we're growing. Because I think the market prioritizes much more linear results. They want to see a company that is able to every single month have more exahash, have more Bitcoins mined, have more Bitcoins on the balance sheet. But the reality is that Bitcoin is inherently volatile, and it's really not your best strategy, as a company who's investing in something like Bitcoin mining, to be dollar cost averaging linearly over time. We need to be strategically timing our bets, and I think that's something that I really hasn't been fully understood by the market, and I think it's really led to an undervaluation of our growth plans, of our strategy, and of our results.
Do you that is unique to Bitfarms? Just being strategic, where you said timing your bets, is that a unique strategy to Bitfarms? And then my follow up question to that is, how do you plan to for lack of a better word, market that to investors? So is it something like, I don't have to market it. Let the proof of work speak for itself. What would your response be?
You're always going to have to market for sure. And I think that's one of the areas where we're really going to be a lot more aggressive as well. We have, I think, for several years, really focused purely on, well, not purely, but we put almost all of our effort on the operations. Um, that's paid out dividends in many, many ways. But, it's not necessarily all that we as a company um, need to do. We need to be thinking beyond just the actual operations, but we need to be thinking about how we communicate that story and that message. I don't think the being trying to be strategic with your growth and your purchases is necessarily unique to us. I think amongst the biggest Bitcoin miners, it's relatively unique. And I think when you look at our discipline, I think you see that our discipline is very strong. There's a lot of people here who are seeking in our industry the largest number possible, and they'll do anything and they'll pay anything to achieve the largest number possible. And it's a hope and it's a dream, but I think if you really want to achieve true freedom, you've got to have the discipline, and you've got to be pursuing discipline in your operations. And I think that's the thing that we've done that builds a lot of value over the long term. I just don't think it's been recognized yet. So now we need to communicate that. We need to explain it, and we need to educate investors in the market at large why that is so important, and why that is so advantageous. I think we can do that. I think especially with me here in the seat, able to understand both from the operational side, but also from the economic side. This is something that we can start communicating a lot more effectively.
Absolutely. And I think you've done an incredible job at that by becoming a public figure and really kind of spearheading that and making your name known. And I think a testament of that was just the community's reaction to you being named as CEO. And before that, like the market smelled it, right? Which is pretty interesting. So Ben, I kind of want to pivot the conversation a little bit. It seems like this year Bitcoin has kind of entered into kind of like the political discussion. A couple weeks ago, the Republican presidential candidate Donald Trump held a fundraiser at Mar-a-Lago, and there was a lot of publicly traded mining executives there. So it seems like the industry is jumping the chasm, so to speak. It's now becoming it's donating to certain political parties. Now, as a Bitcoiner, of course, I would want this to remain bipartisan. I think that this was something that was created by you can make the case, the regulatory hostility. Do you have any thoughts on that, like on that specific subject, specifically in the United States? I know that you guys are spread geographically, but what is your plan, as the CEO to tackle, I'll put it nicely, perhaps politicians that are well intentioned, but have a negative view on the industry as a whole?
Yeah, I think you nailed it pretty well when you said well intentioned but have a negative view. I really don't think there's a ton of hostility out there because they've got all the information and they've analyzed everything and they've come away thinking that this is such a terrible thing. I think it's quite the opposite. I think for a lot of people, they've made their opinions up on a few headlines, and that's really informed their opinion. Beyond anything else. We've done a lot of work over the last couple of years in the different regions that we operate. We had a situation in Canada 2 years ago, right, where we had the Ontario protests. There was freezing of bank accounts, and then there was an immediate reaction by the Canadian Bitcoin community to start donating to the protesters with Bitcoin. Within 24 hours of that happening, the Canadian Parliament introduced, dusted off some old legislation that really had been put aside in 2018 and hadn't been looked at for 4 years since. and introduced it, immediately effective immediately, and also with a period of retroactivity. And it was obviously a move that didn't have anything to do with, you know, hey, what is Bitcoin mining's actual impact on, the communities that they operate in, or the economy or the environment. It was really a political move. It took us years to organize an effort to educate Parliament and to educate policymakers on this. But we were successful. Like, Bitfarms led the effort here in putting together called the Fair Tax Coalition, and we pulled together every single major Bitcoin miner of scale in Canada, with the exception of one, to work together to provide a cohesive and a unified voice, and to explain really what we're doing and why it's not something to be afraid of, but actually why it's a net benefit to not only the communities we're operating in, but the country as a whole. And when we first had those discussions, we people were very dismissal. A lot of those conversations, they'd start with, "Oh, you don't need to explain Bitcoin to me because I used to work at Google, or I used to work at some other company, and I understand tech." And 45 minutes into this conversation, they're asking, "Can you actually show me a photo of one of these Bitcoin mines? Because I've never seen one." Right. And so, like, that was the level of getting started. But the age of Bitcoin miners hiding under the table, I think, is over. We are not going anywhere. We're here to stay. And I think everybody realizes that there is a significant value in collectively working together as an industry to educate people on the benefits and the merits of what Bitcoin is and what Bitcoin mining is, and what it means for the people and the communities that they serve. We were very successful with that in Canada. You're now starting to see a lot of that happen in the United States as well. I mean, we've got multiple different NGOs and private groups who are, lobbying groups who are working to educate senators, policymakers, bureaucrats, staffers. I've been out to DC and done meetings on the Hill, multiple times. There is an interest there, I think, across the industry to educate and to inform, because there is no way that this cat is going back into the bag. And the only way to move forward is really to be treated just like how any other industry would be. And I think this really represents Bitcoin's constant maturity and constantly improving maturity. I've said this multiple times. Like, I look at every halving epoch as a maturity cycle, and the first one was hobbyist miners. The second one was entrepreneurs. The third one was people taking it to scale for really the first time. The fourth one was a corporatization of Bitcoin miners, with all the huge launch of the publicly traded Bitcoin miners, and how they've really changed the game for publicly traded, or for Bitcoin miners in general, because of their access to capital markets and investors. This current halving epoch that we're in right now is about an institutional adoption. And there's no way that we could be here at this level of the maturity cycle without having, one, the previous 4 cycles that built the foundation for us to be here right now. But we also can't push this forward unless we engage, like every other industry, with politicians, with regulators, with bureaucrats, with staffers, in order to make sure that they understand what we're doing, the benefits of why we're doing it, and why this is something to be encouraged instead of fought against. So I'm very optimistic about all of this. There's been a lot of really good effort here to push forward education. We had I had a debate with DeVries even about a year and a half ago, and got him to admit, his model breaks down during periods of quickly rising Bitcoin prices, which is exactly when everybody was wanting to look at his model. So we're doing really, really good, I think, on the educational front, but there's still a tremendous amount of work that needs to be done.
I completely agree. And I think you made a really good point. And I think that's something that just culturally to some Bitcoiners came as a little bit of a shock, because it was like, we're lobbying. I thought the politicians, like, what's going on? It's like, yes, our industry is getting bigger. It's getting more influential, and eventually it gets to a point where, how do I say this? Like, of course, like every other industry, we have to lobby. We have to donate to certain candidates that are going to be pro the industry. And I think that was a little bit of a culture shock to
For
some
sure.
Bitcoiners. But I think, shout out also to the team over at Bitcoin Magazine. They've done an incredible job, really pushing this forward. I think that is we're getting the first tastes of that, and I don't think that is going to decelerate. I think it's going to accelerate, as these years go by. And like you, I'm also incredibly excited. I mean, the fact that the RNC has made it part of their official party platform to protect Bitcoin miners, protect the right to self custody, I think is extremely bullish, to say the least. But anyways, Ben, I do want to, we have about 15 minutes or so left, and I do want to be respectful of your time, and I just want to kind of inform and educate the viewers. What should they be watching out for? What should they be looking out for? Like, what are key performance indicators that you focus to measure your competitive success?
Yeah, key performance indicators across the industry, widely are exahash and watt per terahash. I think about it a little bit differently from an operator's perspective. And my two main key performance indicators are going to be what's your operating cost per terahash or per petahash. So this is your hash cost, and how does that relate to hash price? And then the second KPI here that I think is really, really important is going to be what's your marginal cost to grow the company. There's two kinds of growth in this company in our industry. There's the organic growth where you're starting a scrape from scratch, or maybe you're acquiring something that was blank, and you're adding all that increase in compute. But then there's also the growth that comes out of your upgrades. And when you're upgrading your miners, I think this is the area where it's really easy not to be competitive, because there's such an emphasis on upgrade your miners as fast as possible, and put your hash as high as possible and have the highest efficiency. But what we know from our operations and from all the data and that we've analyzed is that you need to make the marginal cost very, very justified to grow the company. Because if we've got to go out there and we've got to raise capital and we've got to spend, the money that it requires to raise that capital is not free; it comes at a cost. Um, and then we were going to go and grow the company in a way that it's too expensive to grow the company. It doesn't justify it. We'll never see that actual return on the balance sheet. I think that's when people really start to be uncompetitive as a business. I think that is one area where if I was an investor, I would be paying a lot more closer attention to that, because it's something that most companies don't compete on, and it really should be one of the areas that give you a very clear understanding of how that operator is thinking about their growth, their cost to grow, and when is a good time to grow. That more than anything is probably the most telling KPI.
And what's really interesting about what you just said, your statement is that it's almost as if you have a unique view, or a unique perspective of viewing this way compared to your competitors. Is that unique to Ben Gagnon?
I think that's unique to Bitfarms. I mean, I'm the person who instills this idea and this way of thinking at Bitfarms, or at least I did originally. But I think this is well understood within our company. I think when you're looking at last year, when everybody is upgrading XPs, we had so much demand to upgrade to XPs from investors and a lot of retail. But the reality on the ground is like, hey, look, you've got one XP unit. The XP unit is physically about the same size of two M30 units. We had a lot of facilities that we had M31s running, and those M31s were still generating positive free cash flow. They had paid themselves off numerous times over. but they weren't really performing a whole lot of, they weren't really giving us a whole lot of margin or a lot of revenue. But for me to upgrade those, given, what was available on market, I would have had to pull down two miners at 76 terahash to plug in one miner at 140 terahash. Now, there is an efficiency improvement, obviously, from 40 down to the 21 and a half that the XP is rated at. But if I've got to pull down, two units at 76 terahash to plug in one at 140, I'm actually only growing the company 12 terahash, right? I've improved the energy efficiency, but I only grew the company 12 terahash compared to where it was before. And, I've got to pay a very, very large price to do that, because those XPs were trading at $24 a T. So you multiply that by the 140, you're at like $3,300 per unit. Now you got to divide that $3,300 divided by 12. We would never make that money back, right? And what we did was we understood that math. We were patient. We were diligent. We said we're going to wait for better miners at lower prices, and the market didn't like that message until we bought those newer miners at the lower prices and the higher efficiencies. And then the market was like, oh, wow, that was a really smart move. So, those are things that, I think we're very, very competitive on. And we've been very, very disciplined on. And I think that's a huge part of our success over here at Bitfarms is the fact that, when we grow and when we do something, it's because we know it's going to generate huge amounts of shareholder value and long-term value for the company. We're not growing to pump the company for, a weekend. You won't see press releases out from us that are specifically designed to pump the company, and make sure that everybody is running the share price up to date. No, we're building long-term value here because we know that the way that we win in this game is by seeing ahead of the cycle and anticipating it. You don't want to chase the wave. You want to be ready to ride the wave, right? If you're a surfer, like you can't catch that wave. You'll never catch that wave, right? You got to be in place, ready to catch that wave to have a good ride. I think that's really what we've done. I mean, if you look at just kind of that like leverage long bet on Bitcoin price that I had mentioned earlier, and you had reminded me of. I think there's two ways that people are going to be looking at this halving epoch. This whole 4-year period up until 2028, and I think right now the emphasis is really going to be on who's going to have the best exposure to rising Bitcoin prices in the bull market. But I think in 2028, the thing that's going to identify who won this halving epoch is not going to be who rose the most during the bull market, but who navigated the bear the best.
Interesting.
Right? And that's something that, that takes a lot of forward thinking and a lot of planning. And a lot of times it's going to take doing things that the market may not understand at the time.
Yeah, and it's interesting because the whole and I have some insights into just on ramps and of course the media side of things. The year of the bear is the year of survival for the entire industry. The entire industry feels it, and it's like you have to prepare for the winter. Winter is coming, and yeah, exactly. So Ben, what is the ideal situation? You're in the commander seat, my friend, now. What is the ideal situation? Where do you envision Bitfarms 5 years from now? You're in control. You're in the driver's seat. What message would you share with investors? Where is Bitfarms 5 years from now?
5 years from now, we're going to have thinking hypothetically where I want to take it. This isn't obviously a promise on the future. What would be an ideal scenario would be to have a much, much larger energy portfolio, a huge concentration of that in the United States, but exposure to probably every single continent other than Antarctica. You're going to want to have a mixture of energy providers. and of energy strategies, right? You're not going to be tied up to one location, one site, one fuel source, and you're going to want to have a huge, diverse basket of different revenue streams that help you be a better Bitcoin miner. So, I'm looking at things like, thinking about how do you, even on the energy generation side, how do you even do the energy generation side properly, and how would you structure yourself up properly to be the best in a Bitcoin mining situation? There's kind of two scenarios when you're looking at energy generation. One, you want to derive the lowest possible cost for yourself. The other is you want to derive the highest possible price out of each unit of energy that you sell, right? So you're going to have a very, very diversified and well managed portfolio of these energy assets. And I think that, if we do our job right here for the next couple of years, we should be the best position to navigate the bear market that always comes after the bull market, and we should be best positioned after that to tap into the subsequent bull market. That's kind of how we need to think about things. You need to think about things cyclically, and we need to understand how we can navigate and we can manage that exposure for the investors, because the investors are always going to want upside, and upside is fantastic when it's a bull market. But there are certain times when you do need to hedge out your risks, and that's going to come every cycle. If you're going to stay with one strategy through the entire 4-year cycle as market conditions completely change, there's no way you're going to come out on top.
Yeah, and do you believe, because that's one of the narratives that you hear in the community, which is this idea that the halvings are, the cycle theory is dead. The halvings are it's a thing of the past. It sounds like it's not, and I, by the way, I'm in that camp as well. No, of course they're still here. They still exist. So what would your response be to someone that believes that the cycles are, the ETF is here, the cycles are no longer going to play a role in this? What would your response to them be?
And this, you can try and fight a cycle as much as you want, but it's not really a winning strategy. Usually, the winning strategy is to ride the wave. And this is something that is pretty mathematical, right? When you look at just like, let's take one miner. Like, what is one T21 worth? Well, one T21 is worth the amount of Bitcoins that you expect it to generate over the next foreseeable period, and whatever that value is into US dollars. And then you've got a present value discount it back to the machine right now, right? Like, the machine is worth a predictable amount because it spits out a predictable cash flow. When you look at how the Bitcoin miners trade, like, when you look at like how these markets function, when you look at the hash price over every single epoch cycle, you break it down, each having epoch 4-year period, what you'll see is the same thing in the last 3 cycles. The first cycle you can't really use because there was no market there when Bitcoin first got started. There was no real data, and there was no real industry on the mining side. But for the last 3 cycles, what we've seen is, from exiting out of that halving event in that first month, where you're adjusting to the hash price, and the peak of the bull market cycle, which happens 12 to 18 months later, we've seen hash price go up between 300 and 400%. That's happened in each of the last 3 halving cycles. Now, obviously, history is no guarantee of the future, but if that were to happen in this situation, that would imply a hash price of, let's see here, like 15 to 20 cents. Now, to have a hash price of 15 to 20 cents, we've got to have a Bitcoin price that's probably $180,000 to $250,000 without a massive increase in the network hash rate. It's a lot of growth. And what happens is when you've got stable energy prices like we do, and you've got a competitive electricity, you combine those two into that hash cost that I said earlier. Well, that hash cost, if your energy is stable and your efficiency is stable, that hash cost is stable, right? So, Right now we've got a 25 watt per terahash efficiency. We have roughly a 4 cent average electricity price. If you multiply 4 cents by 25 watts per terahash, you get out to about $25 per petahash, or 2.5 cents per terahash, right? Compared to the 4.5 to 5-ish, cents on hash price, that's a really nice margin. But as that goes up to 8 cents to 10 cents to 15 cents, even, 20 cents, if it historically does the high end of what it has done, um, you're still sitting there at that operating cost of 2.1, and you can see how your margins are growing exponentially, right? There's a leveraged long bet here that's embedded into the math itself that is inescapable. And so, you can try and argue with the math, and you can try and fight the math, and you can try and fight the wave, but I don't think anybody wins that way.
What would you say to it's so funny. Every cycle there's a different theory, right? But what would you say to in this cycle? It seems like the diminishing returns narrative is very strong, right? What would you say to those individuals, right? Does and let's say diminishing returns are a thing. I mean, it is a fact of life, right? It's a lot harder for Bitcoin to go from 100K to 200K than it was for it to go from $1 to $2. The law of big numbers comes into play. But does that affect the Bitcoin mining industry? Like, do you see Bitcoin's price appreciation slowing down to a point that perhaps it's not attractive to be a Bitcoin miner anymore? What's your perspective on that?
So, as a Bitcoin miner, we can't control our costs, right? The cost is a function of Bitcoin price and network hash rate. Neither of those things are in any Bitcoin miner's control. You can do some hedging. You can hedge out on the Bitcoin price. You can hedge out with some hash rate derivatives, like the products that Luxor has. Um, but unless you're using some sort of instrument, you don't control your revenue. What you can control is your cost, and it becomes increasingly, more and more important, as the years go by and as halving epochs take place, and as that block reward reduces, for you to control your costs more and more. I think in the future, and it's not going to happen, this cycle, or probably not even the next cycle. Um, but what we see is an inevitable trend of miners moving towards marginal cost energy. And you need to get to this scenario where you need to understand too that this goes back to this normal distribution curve that we talked about at the beginning of the show, where you want to be on these tail end outlier scenarios. Um, if you get to the point where your energy cost is effectively free, then your revenue doesn't matter as much, right? Um, you're now monetizing a waste that's coming out of an energy source that otherwise couldn't be utilized and has to be used or lost right now. You're going to end up in a situation where there's a mutual win between whoever is giving you that energy for free and you providing that equipment, who's going to be able to monetize it for some amount greater than zero. And so, when you look around at like what are the opportunities for growth, people like energy is always the bottleneck for growth in our industry, but it's not as if there isn't energy available on this planet. There's so much energy that's available. Really, what the issue is about making sure that the energy is available at the point and place in time where it's wanted and where it's needed. And if it's not there at that point in time, it may not be able to be used. And so when you look at like what's the number one area of waste for electricity generated worldwide, or what's it? Sorry, what's I already gave away the answer. What's the number one use of electricity worldwide? It's waste, because the like 17% of all the electricity that's generated worldwide cannot effectively make it to a place for it to be consumed. Right? There's imbalances in the system, and there's oversupplies, and the demand is constantly changing because you never know when anybody's going to turn on or off a light switch. And so, you need to be, or the industry is going to move towards this place where the monetization of these excesses, of these wastes, of these inefficiencies will be the primary driver of all the growth going forward. And if your cost is zero, the revenue
Does it? Yeah.
doesn't matter anymore, right? It's your input is zero and you're monetizing it for something better than zero. Like, there are still, and I don't know if your audience knows this, but like they're still actively running S9s today, right? And you
They're all in
know,
Venezuela.
not only in Venezuela, they're in places like Australia and Chile, right? Like these are places where they built out this huge amount of renewable solar capacity, and they don't have any customer for it, and they don't have the distribution and transmission for it, and they overbuilt relative to the demand. And now you've got a situation where the energy that they generate on those panels has to be literally ran into the ground, which is actually not good for the environment either. So what they're doing is they're buying S9s, and they're buying S9s because it's basically the cheapest thing and most cheap, reliable piece of equipment to monetize something that you value at zero at above zero, right? So S9s are still being profitably run all over the world already in this scenario. And I think you're going to see a lot more of that. Eventually those guys are going to upgrade from an S9 to an M20 or an
Mhm.
M30, right? But their cost is still going to be zero. And their operating cost then is going to be labor, parts, maintenance. And as long as the revenue is greater than those, you're going to be generating profit.
And the that figure, I did not know that, right? 17%. That's a massive
Huge.
amount of electricity that's just going poof. For I don't know if electricity goes poof, but I guess the expression still makes sense.
I think that's the exact sound it makes. It's just
Does it go zzz? Anyways, Ben Gagnon, it's an honor to have you on the show. First time CEO of Bitfarms on the show. Really, Simply Bitcoin is honored to have you. Thank you so much for coming on the show. Where can people find you? Where can people follow you? And where can people find out more about Bitfarms? To stay on top of what's going on over there.
you go to our bitfarms.com website, is our only official website. We've got our bitfarms underscore IO Twitter account. We've got a few Bitfarms multi-language accounts. So we've got a Bitfarms, I think, underscore ES for Spanish and underscore FR for French. And then my Twitter handle at hash override. So you can find out, you follow me and the company and all of our activities at those little areas,
Awesome.
those channels.
All right, guys. Well, I hope you guys enjoyed another episode of Simply Bitcoin IRL. You could follow Ben and you could follow Bitfarms and all the stuff that they're doing, all the great stuff. I'm really, really excited. I think Bitcoin miners are going to take over the world, specifically Bitfarms. So definitely go check them out. All right, everybody. If you guys enjoyed the show, you know what to do. Smash that like button. Consider subscribing if you feel like we provided you value. Tune into the live show Monday, 12:15 p.m. Eastern Standard Time. We'll be live streaming from Nashville, Tennessee, and we'll be taking over the news desk at the Bitcoin Conference 2024. We're really looking forward to that. Until then, have an amazing weekend, everybody. Take care. Peace out.
Bye, guys.
Episode was brought to you by bitcoinwell.com, on a mission to enable independence.